Hey, this is Daryl Henry with Insurance for Entrepreneurs, and this video is how much does general liability insurance cost for businesses in Maryland? I'm going to walk through the criteria. It's really impossible to answer that question for every single business, but what I'm going to do is I'm going to give you the different criteria that impact your pricing so you can have an idea how insurance companies are going to take a look at you. All right, so starting from the top, your industry and your risk is going to impact how much you pay. So it's one thing if you're a florist, it's a totally different thing if you manufacture dynamite. And so the type of business that you're in is going to impact how much money insurance companies are going to feel they're going to need to charge you in order to pay for the lawsuits that may arise from your business. This is why it's really important when you're going through your program to understand how you're being classified. It can work both ways. Either a company might choose a classification that seems way too risky for you, or sometimes they choose a classification that's really not risky enough. So, for example, I'm living through this in a couple situations, but if they choose a classification that's risky enough, not risky enough, and then over time they take another look at you, they may change their mind on what you should be paying, and they may change their mind on whether or not they want to insure you at all. So, making sure you have the appropriate classification so that you're paying the appropriate amount of money will help you have stability in your insurance program over time. The second factor that's going to impact how much you pay is the size of your business. Now, depending on what you are, you're going to be measured in different ways. If you're a real estate company, they're probably going to use square footage of your buildings, or they may use number of units, or they may use the type of units, the type of businesses that you rent to. If you're in manufacturing, it's going to be what do you manufacture and then what are your sales numbers? Contractors, it's payroll and subcontracted costs. But the whole idea is that if you're a contractor with $1 million of payroll, you're a lot riskier than a similar contractor with $100,000 of payroll. So the size of your business is going to impact how much you pay. The third thing that's going to impact how much you pay are your coverage limits that you choose. If you want $1 million of general liability insurance, that's one thing. But if you go back and say, I need 5 million, 5 million is more expensive than 1 million. Also, if you start peeling back certain parts of the general liability policy, maybe you add deductibles, maybe you say, I don't want product and completed operations liability. I'm not sure why you do that, but you'll start to see that what you pay may come down because you choose different options. Your the fourth thing that'll impact you, where you are, your business location will matter. Certain court systems are very unfriendly to insurance companies, and those companies know what they are. They know what it looks like because they have to deal with lawsuits in those jurisdictions all the time. And so, if you're in those jurisdictions, they're going to ask for more money because they know if you get entangled in a lawsuit, they're going to have to pay more for the attorney and for the settlement. You can look it up online. They're called judicial hellholes. And I think we all kind of know which court systems intuitively are going to be more expensive than others that are just going to be less friendly to business. The next thing that impacts how much you pay is claims history. Basically, what underwriters do is try to predict the future based on the past. In a nutshell, that's what insurance is they take as much data from the past to try and create some idea and models to predict probabilities into the future of what they think will happen. And one of the things that really impacts you is your previous claims history. If you've had a lot of claims, they're going to say it's more likely you're going to have a claim in the future. If you've had no claims, they're going to say you look like a good operator. We think it's going to be less likely that you have a claim in the future. So your claims history is very, very important. The next thing that will impact you is deductibles. And I alluded to this in a previous line item, but the options that you choose are going to impact how much you pay. If you have a $2,500 deductible or a $10,000 or a $25,000 or a $50,000 deductible, that's going to impact how much you pay for the insurance because you're offering to pay more money before the insurance company pays anything, which means they're taking on less risk. It means you're taking on more risk in a different way. And that's where you need a metric that's called total cost of risk, because what you pay for insurance is more than just the premium on the page. What you pay for insurance is uncovered claims, it's deductibles, it's what you pay out of pocket plus the premium on the page. So if you're going to take on more risk, make sure you're factoring that in your mind, because you need to make sure you finance that risk in your budget. And the last thing that I'll talk about that impacts your pricing is policy bundling and discounts. Now, every company is a little bit different, and a lot of companies don't necessarily have a straight multi policy discount where they say, we'll charge you less for general liability if you also buy auto insurance for us. That's not typically how it works. But what an underwriter does think is that if you show that you are more committed to them as a company and having a vested relationship with them, and you have a history of having a committed relationship, and they know that they can spread their risk across your entire organization, so they know if they get your general liability, your auto, your work comp, your umbrella, your tools, whatever, all that different stuff, they're going to say, well, if I get hit on any one particular coverage, I still have these other coverage lines to offset the risk on this one coverage line. So if they're only getting one coverage and they're looking at you and saying, I have to make money on this one coverage, they may feel like they have to charge more money to take on that risk. Whereas if they say, I'm getting 5 different coverage lines, I've got 5 different ways to offset this risk, they may be willing to be lower on each of them because they're feeling like they've got ways to offset the risk with you as an organization. All right. I hope that helped. If it did, please hit like and subscribe. It helps other people like you find the content and find the channel. And if you want to learn more about me, go to my website at insuranceforontrepeneurs.net. My contact information is there. You can find lots of other content. And as always, thank you so much for watching. I wish you the best. Go build something great.